Bitcoin is a speculative mania according to the Governor of the Reserve Bank of Australia. But it's not so easy to say that Bitcoin is a bubble. We don't know how to value it. Recent price rises, close to $18,000 in the past 3 months, may be too great and can't continue. But the Bitcoin market is only just maturing as an investment and as a currency, and so it may still have room to grow. A bubble is when the price of an asset diverges from its fundamentals, the aspects of an asset that investors use to value it. These could be the income that can be earned from a stock over time, a company's cash flow, the state of a country's economy, or even the rent from property. Read more, The Bitcoin Bubble, How We Know It Will Burst. But Bitcoin does not pay out profits, like shares, or rent, like property, and is not attached to national economy, like fiat currencies. This is part of the reason why it is hard to tell what the underlying value of Bitcoin is or should be. In the search for fundamentals, some have suggested we should look at the supply of Bitcoins in the market, which is regulated by the technology itself, the number of Bitcoin transactions through the market, or even the energy consumed by Bitcoin miners, the computers that validate transactions and are rewarded with Bitcoins. Diverging from fundamentals. If we take a close look, we can see how the price of Bitcoin may be diverging from these fundamentals. For instance, it is becoming less profitable to be a miner, especially as the energy required increases. At some stage the cost may exceed the price of Bitcoin, making the network less worthwhile to both mine and invest. Bitcoin may be the best known cryptocurrency, but it is also losing market share to other cryptocurrencies, such as Ethereum and Litecoin. Bitcoin currently accounts for 59.4% of the total global cryptocurrency market, but at the beginning of 2016 it was 91.3%. Many of these other cryptocurrencies have more functionality than Bitcoin, such as Ethereum's ability to execute smart contracts, or are more efficient and use less energy, such as Litecoin. Read more, What Happened to the Price of Bitcoin? The Truth Behind Big Bubbles and Crashes. Government policy, such as taxation or the establishment of national digital currencies, may also make it riskier or less worthwhile to mine, transact or hold the cryptocurrency. China's ban on initial coin offerings earlier this year reduced the value of Bitcoin by 20% in 24 hours. Without these fundamentals, the price of Bitcoin largely reflects speculation. And there is some evidence that people are simply buying and holding Bitcoin in the hope it will keep rising in value, also known as greater fool investing. Certainly, the cap on the total number, 21 million, of Bitcoins that can exist, makes the currency inherently deflationary. The value of the currency relative to goods and services will keep increasing even without speculation, and so there is a disincentive to spend it. Bitcoin still has room to grow. Many big investors, including banks and hedge funds, have not yet entered into the market.